A minor sell-off on Wall Street as investors kept an eye on interest rates for the 10-year note, which touched a 14-month high on Tuesday. High-flying growth stocks were hit again, which left the Dow, the S&P 500, and the Nasdaq all modestly lower by the closing bell. Tim Bray, a fund manager at Guidestone Capital Management, wasn't shaken by Tuesday's market action.
I think the mood of the market is still optimism. Investors are shying away from bonds. Yes, you've seen a little bit of a pullback in equities, but I still think it's an optimistic market. I still think it's a buy the dip market. We still see a lot of growth coming. So, it's still positive versus negative, I would say, today.
Bank stocks recovered as investors viewed the fallout from the problems at Archegos Capital as limited. Wells Fargo came out and said that while it had a relationship with the troubled hedge fund, it no longer had any exposure and did not experience any losses. That was enough to send shares of Wells Fargo up 2.5%. Consumer moods have been lifted by the vaccine rollout. Consumer confidence hit its highest since the health crisis began a year ago, according to a March survey by the Conference Board. The improving labor market and the good vibes from President Biden's $1.9 trillion economic relief plan are also bolstering confidence. With consumer spending responsible for 2/3 of all economic activity, that bodes well for the economic outlook.